Welcome to our channel. Today we dive into one of the most discussed topics in the financial world, Ray Dalio's forecast for 2025. Ray Dalio is the founder of Bridgewater Associates, known as one of the most influential and experienced investors of our time. His predictions always draw significant interest, as he foresaw the 2008 crisis and highlighted issues in the global economy long before they became evident. So what can we expect in 2025? Let's find out. Let's start by acknowledging that Dalio openly expresses his concerns about the state of the global economy. He believes that enormous debts, rising inflation, and an unstable political situation create a cocktail that could lead to catastrophic consequences. In current conditions, many experts are confident that despite high levels of debt, a crisis can be avoided. However, Dalio argues that history shows the opposite. Whenever debts and inflation reach critical levels, the economy faces serious difficulties. Looking at past examples, such as the crises of the 1990s and 2008, when high levels of debt led to market crashes and economic turmoil, the risk of a financial crisis is becoming increasingly relevant today. With global debt exceeding $300 trillion, the threat of a financial downturn looms larger. What are these difficulties? They could manifest as slowed economic growth, significant market declines, and increased unemployment rates. Next, let's discuss central bank policies. Currently, central banks are at a crossroads. Dalio believes that in their attempts to stabilize the economy, they may raise the target inflation rate, allowing it to reach 3 to 4%. This could signify a shift to so-called hot inflation, where prices continue to rise while interest rates remain above normal levels. Why is this dangerous? Such an approach could undermine trust in central bank policies. Instability in monetary policy can lead to market volatility. Imagine investing in assets that start losing value simply because the system has become unpredictable. In such times, investors tend to panic, leading to mass sell-offs and further market declines. Now let's discuss another crucial aspect: the rising geopolitical tension. Ray Dalio predicts that global conflicts will intensify in the coming years, significantly impacting the economy. Amid political controversies, major trade wars, and potential military conflicts, a substantial portion of resources may be redirected towards defense and protecting national interests rather than fostering economic growth and investing in productive projects. This presents risks for investors. If you are putting your money into countries where conflicts may arise, the likelihood of losses increases significantly. How will this affect your investments? According to Dalio, those who ignore geopolitical risks may find themselves in challenging situations when their assets begin to lose value due to conflicts or economic sanctions. The next important aspect is the debt situation, particularly in the U.S. Dalio emphasizes that when countries find themselves in a debt trap, their ability to cope with crises diminishes. When investors lose confidence in the economy and begin to doubt debt obligations, the market can experience a real shock. Imagine a scenario where distrust in debt securities renders the credit market unstable. This triggers a chain reaction of problems for all other markets and assets. If economic difficulties worsen, we could witness the onset of a credit crisis, affecting nearly everyone, from individual investors to large corporations. In such a scenario, it's vital to remember that the stability of the financial system directly hinges on investor confidence. Financial crisis predictions in the past and future. Dalio's past predictions have often captured the cyclical nature of the economy. For example, he has spoken at length about the big debt cycle, a concept he uses to explain economic downturns. Dalio believes that history follows predictable cycles.
In my opinion, we are at the beginning of a very classic late cycle,
where periods of growth lead to unsustainable debt levels, ultimately followed by economic downturns. He famously applied this model to predict the 2008 crisis, asserting that debt-fueled growth always leads to a financial correction. This understanding of economic cycles has become the foundation of his approach to investing. Looking forward, Dalio anticipates that another significant economic downturn may occur within this decade if debt levels continue to grow without sustainable policies in place. His projections are rooted in the belief that governments worldwide are not prepared to manage the cumulative effect of debt, inflation, and the geopolitical issues affecting global markets. And now we come to the most important part. What does Ray Dalio recommend under these circumstances? His primary advice for 2025 is diversification and inflation-protected assets. Dalio advises against relying solely on the assets of a single country and instead spreading investments across different markets. He emphasizes that diversification in countries with low government debt and relatively stable economies is particularly important to minimize risks associated with the U.S. economy. Additionally, it's wise to focus on inflation-protected assets, such as commodities or assets that could benefit from rising prices. For example, agriculture and energy sectors could become promising investments in the face of rising inflation. Diversification of assets is not just a strategy, but a necessity in the context of global uncertainty. Thus, the key message from Ray Dalio is not merely caution, but an active approach to risk management. The time when one could bet on a single market or asset has passed. No matter how much we hope for the best, he believes that readiness for global uncertainty is what will ensure the resilience of your finances in the future. Remember, investing is a long-term strategy, and it's essential to be prepared for any changes in the financial markets. Thank you for watching. Only on our channel will you find key strategies and secrets to financial success that can help you invest wisely, grow your capital, and reach a new level.